Welcome back, my friends. The news today is that U.S. crude oil price fell by nearly 4%. Oil now erases 2024 gains with supply poised to rise as demand falters. OPEC Plus delegates have indicated that the producers group is still planning to increase oil output in October, sources told Reuters. Manufacturing in China, meanwhile, fell to a 6-month low in August. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. U.S. crude oil futures fell nearly 4% on Tuesday, erasing all gains for the year as an increase in supplies is potentially on the horizon as demand falters. The move came after a report that Libya's rival governments could reach a deal that would help restore oil output after days of disruptions. Libya's eastern government in Benghazi has slashed production in a dispute with the UN-backed government in Tripoli over who should head the central bank. The governor of Libya's central bank, Sadiq al-Kabir, told Bloomberg that there were strong indications the North African country's rival governments were nearing a deal to end the dispute. Here are Tuesday's energy prices. West Texas Intermediate October contract, $70.65 per barrel, down $2.90, or 3.94%. Year-to-date, U.S. crude oil has fallen 1.4%. Brent November contract, $74.05 per barrel, down $3.47, or 4.5%. Year-to-date, the global benchmark has dropped 3.9%. RBOB gasoline October contract, $1.98 per gallon, down more than 10 cents, or 5.06%. Year-to-date, gasoline has fallen 5.5%. Natural gas October contract, $2.15 per thousand cubic feet, up more than 2 cents, or 1.08%. Year-to-date, gas has declined 14.5%. Oil prices had already taken a turn lower as OPEC Plus is poised to increase production in the coming weeks, and manufacturing activity in China and the U.S. disappointed the market. OPEC Plus delegates have indicated that the group is still planning to increase oil production in October, sources told Reuters and Bloomberg. Manufacturing in China, meanwhile, fell to a 6-month low in August, according to data released over the weekend. China is the world's largest importer of crude oil, and manufacturing activity in the U.S. was slower than expected last month, according to a report from the Institute for Supply Management Tuesday. OPEC Plus, however, made clear in June that it could reverse the planned production increase based on market conditions. The best course for OPEC Plus would be to wait until December given slowing demand in China, Helly McCroft, head of global commodity strategy at RBC Capital Markets, told clients Monday. There are indications that the world could face an oil glut by the end of the decade. According to a report from the International Energy Agency, IEA, rising oil production combined with declining demand due to the shift towards electric vehicles and renewable energy could lead to a significant surplus. The IEA projects that the global oil supply capacity could reach about 114 million barrels a day by 2030, which would be around 8 million barrels a day more than the projected demand. This potential oversupply could have various impacts on the oil market, including lower oil prices. However, the exact effect on prices is uncertain due to factors like refinery shutdowns and the pace of the transition to renewable energy. OPEC's production cuts have both positive and negative impacts on the organization and its member countries. Here's how the production cuts are helping OPEC. Stabilizing prices. By cutting production, OPEC aims to stabilize or increase oil prices, which can be beneficial for member countries' revenues. Higher prices help offset the reduced volume of oil sold. Market control. Production cuts allow OPEC to exert more control over the global oil market, helping to manage supply and demand dynamics. Revenue boost. For countries heavily reliant on oil exports, higher prices can lead to increased national revenues, which are crucial for their economies. Here's how the production cuts are hurting OPEC. Market share loss. Reducing production can lead to a loss of market share to non-OPEC producers who do not participate in the cuts. Economic strain. some member countries may face economic strain due to reduced production volumes, especially if they are already struggling financially. Global relations. Production cuts can strain relationships with major oil-consuming countries, which may seek alternative energy sources or suppliers. Overall, while OPEC's production cuts can help stabilize prices and boost revenues in the short term, they also pose risks such as losing market share and straining international relations. Electric vehicles, EVs, are significantly impacting global oil demand. As more consumers and countries adopt EVs, the demand for oil is expected to decline. Here are some key points. Reduction in oil consumption. EVs displace the need for oil used in traditional internal combustion engine vehicles. For example, a standard combustion engine passenger vehicle in the US uses about 11 barrels of oil equivalent, BO, per year. As more vehicles become electrified, this oil demand is replaced by electricity. Global impact. By 2021, EVs had already displaced around 1.5 million barrels of oil per day too. This figure is expected to grow as EV adoption increases. Bloomberg NEF predicts that by 2025, EVs will save approximately 886,700 barrels of oil per day. Future projections. The International Energy Agency, IEA, projects that electric vehicles could displace as much as 5 million barrels of oil per day by 2030. This shift is driven by the increasing sales of EVs, which are expected to continue growing rapidly. Market adaptation. The oil industry and policymakers need to adapt to this transformative shift. As the demand for oil decreases, there will be a greater focus on renewable energy sources and electricity to power transportation. The transition to electric vehicles is a crucial part of the broader move towards sustainable energy and reducing greenhouse gas emissions. Oil-producing countries are taking various steps to respond to the shift towards electric vehicles, EVs, and the resulting decline in oil demand. Diversification of economies. Many oil-dependent countries are investing in diversifying their economies to reduce reliance on oil revenues. For example, Saudi Arabia's Vision 2030 plan aims to develop sectors like tourism, entertainment, and technology. Investment in renewable energy. Countries like the United Arab Emirates, UAE, are investing heavily in renewable energy projects. The UAE's Masdar city is a prime example of a sustainable urban development project focused on clean energy. Strategic partnerships. Some oil-producing countries are forming strategic partnerships with EV manufacturers and technology companies to stay relevant in the evolving energy market. For instance, Saudi Aramco has invested in various technologies related to hydrogen and carbon capture. Policy adjustments. Governments are also adjusting their policies to support the transition to cleaner energy. This includes subsidies for renewable energy projects and regulations to reduce carbon emissions. 1. Exploration of new markets. Oil-producing countries are exploring new markets and uses for their oil, such as petrochemicals and other non-fuel applications. These strategies are part of a broader effort to adapt to the changing energy landscape and ensure economic stability in the face of declining oil demand. The age of oil is not coming to an immediate end, but it is undergoing a significant transformation. Here are some key factors driving this change. What about declining demand? Electric vehicles, EVs, as we discussed earlier, the rise of EVs is reducing the demand for oil in the transportation sector. Renewable energy. The global shift towards renewable energy sources like solar, wind, and hydro is decreasing reliance on oil for electricity generation. How are policy and regulation affecting the situation? Climate policies. Governments worldwide are implementing stricter climate policies to reduce carbon emissions, which often include measures to decrease oil consumption. Carbon pricing. The introduction of carbon pricing and taxes on fossil fuels is making oil less economically attractive compared to cleaner alternatives. Technological advancements. Energy efficiency. Advances in energy efficiency across various sectors are reducing the overall demand for oil. Alternative fuels. Development of alternative fuels, such as hydrogen and biofuels, is providing new options that can replace oil in certain applications. But what about economic diversification? Oil-producing countries. As mentioned earlier, many oil-producing countries are diversifying their economies to reduce dependence on oil revenues. And what's the long-term outlook? While oil will continue to play a role in the global energy mix for the foreseeable future, its dominance is expected to diminish. The International Energy Agency, IEA, projects that global oil demand will peak in the next decade and then gradually decline. The transition away from oil is a complex and gradual process, influenced by technological, economic, and policy factors. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And, before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So, be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.